Good evening. Today is Black Monday, the day the Dow dropped more than 500 points. The day the Dow dropped more than 22%, almost double the rate of the Black Monday that signaled the beginning of the crash of 1929. But this crash of 1987 is not just an American experience. Around the world, stock markets fell faster than a skydiver without a parachute.
I just came from inside and it looks like a madhouse.
It's so crazy. Nobody even expected it to be down this much.
Hour after hour today, wave after wave of selling hit the stock market. A selling panic, the professionals call it. By the closing bell, the Dow Jones Industrial Average was in the steepest fall in its 103-year history.
There have been many theories that have attempted to explain what happened, but there's been no definitive answers as to why we had a major crash. Most people agree that widespread panic accelerated the decline and the crash.
Bad day.
Bad day for you?
Another one, yeah.
Yeah, I know.
Too many in a row.
It was enough to force the Dow Jones down 616 points, a drop of 5.5%. The fragile technology stocks even harder hit, the Nasdaq index in freefall down nearly 10%. It lost a quarter of its value in just 1 week.
Once this body started in motion, it was very, very difficult to put the brakes on. And by 1 o'clock, everyone threw in the towel and said it's a foregone conclusion. These things are going down.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
And on days like this, one of the ways websites and newspapers illustrate the panic at the stock exchange is by showing us a still photo of a really stressed out looking trader. A guy with his hand on his head, jaw dropped, opening up, his hair standing up. And
the World Health Organization raising its global risk assessment for the coronavirus's spread and impact to very high, the same level as it's had for China since late January.
In ticks on the S&P. That means the first circuit breaker
for whom the bell tolls
has been triggered.
Equities down and down hard. Thursday was the biggest drop since 87. Friday, the biggest pop since 08. And guess what? We're back down with futures limit down going into the cash open.
Lower by more than 8%. Of course, that greater than the 7% level that triggers the level 1 circuit breaker. That means we will not trade again until 9:45. We will see if we can come off of those lows. Same for the Dow.
And we saw our third trading halt in just 6 sessions right at the open, a 15-minute halt with the S&P down 7%.
Obviously brutal. I mean, the markets rushed toward a place to say we have to start handicapping the probabilities of a recession in this country.
The government stopped getting in the way of letting the supply chain work its way out of the COVID slowdowns. Stop waging war against energy, for example, which raises the prices for everyone. Government get out of the way, the Fed stop printing money, the American economy will recover. Truly.
That's it.
And the government...
歡迎收睇無線7點半1小時新聞，我係黃善河。今晚嘅主要新聞有
China first row.
China retaliates, escalates carnage on Wall Street.
Markets falling, tumbling. Stocks plunging. Down, down, down. The Nasdaq's getting crushed. Small caps are getting crushed.
This is a shock to the system.
It is ugly out there. Worse than worst case scenario.
Stocks are getting slashed and burned. $2.5 trillion vaporized.
CMIB ha perso il 3,60%, sono andati bruciati oltre.
Yo le estaba diciendo que este sábado 184 países amanecieron con aranceles del 10% impuestas por Donald Trump. Desde el miércoles que anunció la imposición de tarifas y el fin del orden comercial, se han registrado pérdidas insólitas en las bolsas del mundo. De verdad, es una locura. Entre el jueves y el viernes, las bolsas estadounidenses tuvieron pérdidas, le digo, históricas. No se habían visto en 5 años pérdidas de...
Il l'a vraiment fait. Le Nasdaq, évidemment, les valeurs technologiques. Oups, ça n'a pas cliqué. Le Nasdaq, là, c'est pire dans ce cas-là. 4,5%. 4,5% pour l'ensemble des valeurs technologiques. C'est une baisse absolument spectaculaire.
It's not the time for you to be selling stocks. Not here. Now, it is possible that these markets could pop in a little bit, but they're going probably to continue down until something makes them stabilize. Confusion, not knowing what's happening, people changing their minds. It is not good for the stock market. So what are you to do? If you are diversified, if you have time on your side, which is at least 5 years or longer, I want you to just sit back and relax. Just watch what is happening here. Don't be selling, because you're going to be regretting it when these markets eventually do turn around. So don't do that. For those of you in retirement accounts right now, and you are dollar cost averaging, especially in your employer sponsor plan, where you're putting money in every single month, continue to do that. Do not stop. Do not stop. Do not stop.
Pump the brakes. Not your financial advisor. Seek counsel. I got to put that disclaimer out there. Pump the brakes. Don't make an emotional decision. If you're a passive investor, not an active one. Active is somebody that watches it 24/7 and is managing everything that's going on. But if you're passive, 401k, mutual funds, stocks, bonds, stuff like that you have, that all of them, oh my God, Bitcoin went to this, Ethereum went to this, look at the Tesla, look at Max 7, look at what are we going to do? Just pump the brakes. This tariff situation is going to come about and it's going to go. You have to know one thing that the president knows and every CEO of every job knows. If the market goes in the shits, guess what? The other party's taking over midterms. I don't know if you understand what I'm saying to you. So every leader knows when you come in and you make some drastic changes, it better work or else the other side's going to get a job. They know that. Trust me. So having said that, long term, future looks bright. Short term, only the paranoid survive. Whatever you do, try to tap into your ability to reason. Not emotion, but logic and reason. If you do that, we're all going to be fine.
I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote and never pay it. You don't need to pay attention to them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more, and be comfortable with it as long as you're comfortable with the holding. And I pointed out, I think a year, maybe 2 years ago in the annual report, just the one before this most recent one, I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the virus. It strikes.
Okay, now we'll get to the important stuff. There's always something to worry about. This is the difference. This is what happens in the stock market. Because, see, everybody's got the brain power to do well in the stock market. The question is whether you have the stomach for it. That's the key organ in the body. There's always something to worry about. I went to school, grew up with a kid in the 50s. In the decade of the 50s, there's this big theory that the Depression was caused by a stock market crash. Totally wrong. Less than 1% of Americans owned stocks in 29. We had this big-time recession. In fact, it was a depression. It wasn't caused by the stock market. The economy went down, the Federal Reserve raised interest rates, and we had a big-time depression. In fact, we had several depressions like that from 1850 on. This was only one of about 8 depressions since 1850. So people weren't buying stocks in the 50s because they thought that another Great Depression was going to happen. In addition, people were very scared about nuclear warheads and nuclear war in the 50s. People were building fallout shelters, stocking canned goods. There's something about going to Vermont, building a fallout shelter, putting canned goods in it, that you don't buy Minnesota Mining or you don't buy Eastman Kodak. The syllogism just doesn't work out that you're buying lots of water, buying a shotgun, buying frozen food that will stay in the freezer with your own generator, and you're looking at growth stocks. Doesn't seem to work out that way, But people are worried about a depression and nuclear war in the 50s. And then, the warheads, they couldn't do much damage back in the 50s. Now one of these Stan countries, these Kakistan and Kazakhstan, all these Stan guys that have spun off these Friedman-Building spin-offs from the Soviet Union, every one of these little countries has enough warheads to blow the world up 88 times. Right? Who's built a fallout shelter there? We stopped worrying about it. There's always something to worry about. In the 50s, it was depression and nuclear war. The 50s was the best decade this century for the stock market, except for the 80s. Only slightly better. The 80s were only slightly better. People didn't expect a lot. We had it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks are going to go bankrupt, and we're going to have a Great Depression, and the stock market was going down. And I remember when the money supply was growing too fast, and they said we're going to have a depression. Then it was growing too slow, we're going to have a depression. Then the Mideast was going in the world. Remember that one? The Mideast was going in the world. They weren't going to buy our bonds, and the market crashed, and we're going to have a depression. Then Japan was going in the world. Remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system's in trouble. And people said Japan was going to collapse, and we're going to have a depression. Commercial real estate, global warming, And I think the older you get, the more nervous you get about these things. I think it's very valuable. I think while younger people are better investors is they're not worried. They haven't heard about all these crises. And they're with children. I think if you don't have any kids, you got to rent some kids for the weekend. Get a 7-year-old and ask him if he knows about the money supply, how fast it's growing. Ask him if he knows about the shape of the yield curve is the wrong shape of the yield curve. Ask an 8-year-old if they know about that. 8-year-olds have a very high expectation about the next 20 years. That's what you need to do. The more you get away from 8-year-olds, the more you get away from 11-year-olds, the more you start reading these crazy things you read over the weekend. In fact, from 1955 to 1985, the stock market went up a grand total of 1,000 points, but it was down 800 on Mondays. So it was therefore up 1,800 on non-Mondays. It wasn't an accident. The stock market went down. October the 19th, 87 was a Monday. People over the weekend become economists and portfolio strategists. So I don't worry about that. I know we've had 96 years of century, and the market's fallen 53 times. We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, we have a 10% decline. Of the 53 declines, 15 have been 25% or more. So 15 in 96 years, about once every 6 years, the market falls 25% or more. That's what we call a bear market, you know that. And it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen. It doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with.